Right now is an opportunity of a lifetime for people in crypto, starting with a small amount of money to be able to grow it into millions of dollars. And this isn't by having to go all in on some sort of meme coin, hoping for say 100x, 300x, or risking basically all of your capital. And you don't have to be a genius to do this process, you just have to understand how. Okay, and while most people are too scared to invest right now, where the news is bad, sentiment is bad, I can tell you from 8 years of experience and being through 2 crypto cycles, these are the exact opportunities to buy to create these life-changing opportunities. I'm talking about growing small amounts of capital into insane amounts of wealth by following a relatively simple process. Okay, and what I'm going to share with you here is the exact framework and core way I was able to scale my portfolio well into the 7 figures at the age of 27. So in order to do this, we have to understand why we're on the brink of potentially one of the largest opportunities here in our generation, my total portfolio structure and methodology to actually implement and grow your capital that you can apply for yourself. And then I'm going to share with you some high potential crypto projects that I see that we can put into this framework that I think can well outpace the market and get us to our goal faster. And once again, this is going to be practical application. This is not clickbait. I've been doing this for 8 years. I'm going to be sharing with you all of these insights and how to really start with a small amount of money to be able to scale it up into millions. So let's get into the opportunity at hand and what I see with the crypto market as far as this bull run, where we're at, where we could be going, and what's happening right now. So there's been a lot of disinformation and a lot of fear mongering sort of in the media where people think that the cycle's over and that things are dead in crypto. This is what happens every single time. You have to be able to see through the noise and be able to understand what you're actually going to follow as far as a process. And you can't be flipping your investment strategy around based on how you feel at the current time. This is why 99% of people can't see the ridiculous opportunity that's in front of them. So we're going to talk exactly about that. So first and foremost, in my opinion, this cycle is not over. Maybe the cycle is going to look different, but what I'm going to do is be following the patterns since the beginning of the crypto market. I'm going to show you the growth trajectory on Bitcoin, some of the metrics that I'm looking at, and why that's important for our overall approach. All right, so right here we have a weekly chart of Bitcoin. What's really important to understand is that Bitcoin moves in a cyclical nature. All right, so every 4 years there's a halving period where mining rewards are cut in half. And this is sort of meant to be a self-regulating process, and we can actually look to see how Bitcoin moves in these cycles. So each blue line here is mapping out a halving cycle. So first and foremost, this cycle, if it were to be over here, would be the shortest cycle that we've had since the inception of Bitcoin. I'm not going to go back to our first cycle, but it was roughly the same. All right, but you can see back in 2016, 532 days into the cycle was the all-time high big push after this blue line, which is our halving period. Then fast forward to May of 2020, 532 days after is almost the exact, once again, all-time high of our cycle. Missed it by a few weeks, but roughly relatively the same duration. Fast forward to April of 2024, when we got our halving cycle, 532 days would take us out to October 20th of 2025. Once again, doesn't have to go exactly to that date to a T, but since the creation of Bitcoin, this would be the shortest cycle if we were to stop here. And one of the biggest bullish things to me is that all of the interest has seemed to fall right out of crypto again, but we're still almost right here near all-time highs. This is a super bullish indication for me. Okay, I'm going to do a little bit more analysis on this chart, but this is something that I would say most 99% of people do not understand. And this is one of the most important things for us to be able to follow this process of scaling capital, managing a crypto portfolio, and actually making significant money during crypto cycles. All right, and that's by understanding something called global and national liquidity. Okay, this is the key metric that is going to drive the crypto markets, right? Everyone has their reasons as to why Bitcoin is moving or crypto is moving in general. Okay, this is the real reason, and this is oftentimes the indication of what's to come. And this is leading into why, once again, I'm so bullish on the opportunity at hand right now. All right, so let's go back to 2008 for a second, where we had the housing market bubble and the stock market crash, and one of the more significant market crashes in the stock market. Okay, so global liquidity is basically capital injection or money supply being put onto the balance sheet for a country. This is going to move in tandem with interest rates, which is going to either make it easier or harder for money to be borrowed. So think of liquidity as how much money is available. All right, so when 2008 happened, you can see this is what the stock market was doing, selling off. And you can see this is the first jump that we got in global liquidity, which is across the board of all the major nations. And then also in US liquidity, which you can see US started first and then global thereafter followed. And you can see even though the market was moving down, the global liquidity was increasing. And you can see since then, the S&P 500 has moved up 400%. And this capital injection sort of created this first hyper movement up in the stock market. Okay, and this is not because things are becoming more valuable valuable at that rate, it's because now we're starting to watch the degradation of the dollar, and assets are actually just reflecting a higher price as compared to the value of the dollar. As you make more currency, you're effectively destroying the underlying value of the currency. But that's going to cause something called asset inflation, and that's really the primary driver as to why we saw the stock market going on this rip. Okay, fast forward to 2020 where we had the scary virus sell-off. You'll notice the US liquidity and the global liquidity sort of was on a several year downturn. And then all of a sudden we had the next massive capital injection into not only the global, but the US as well. And lo and behold, look at exactly what happened to the S&P 500. All right, and you'll notice back in 2008, obviously Bitcoin wasn't around, but in 2020, Bitcoin was around. And you can see once we got this massive injection of global liquidity during a crisis situation, this is exactly where we got a nearly 500% return in Bitcoin in just a few years. All right, and fast forwarding to right now, we have massive amounts of uncertainty in the market. We have a potential really big trade war situation where the market is still at a really high point, and we could see really big sell-offs if things don't go well. And after a significant drawdown in US liquidity and global liquidity, we could be primed up for another big injection, only this time we have way more adoption in crypto and way more access. Okay, whereas most people don't want to invest in times like this and think everything is going to crash, these negative impacts are what drives increases of global liquidity, which triggers massive runs in the traditional markets and also now the cryptocurrency markets. But in my opinion, there's an even more crazy opportunity in this. In the midst of this sort of trade war uncertainty, one of the largest players and one of the largest global trade partners, not only for the US, but for the entire world, is China. You can see the total GDP of China has reached $114 trillion. And this is coming from a 2021 diagram where we can see industrial production, 37 trillion, wholesale, 10 trillion, farming, 8.7 trillion, finance, 9 trillion. And these numbers have all increased since then. But I think what's important as an investor in cryptocurrency to understand is that when major bad things happen on a global level previously, and there's been a ton of these events, all of that wealth gets completely wiped out. And oftentimes that commonwealth doesn't have the vehicle or the means to be able to actually preserve that when values of currencies drop dramatically and other bad catastrophic things happen. We can see in 2015, 2016, there was a Chinese currency crisis with $1 trillion worth of capital flow. With the Ukraine war, there was $250 billion of capital flight out of Ukraine. And even back in 2020, there was $1.2 to $1.5 trillion of global reallocation. And once again, what do we see happen to Bitcoin and cryptocurrency during this period? A massive amount of inflow. All right, and right now the Chinese government, other governments are starting to dump US bonds with all of the tariffs being implemented. This or something else could potentially create a massive amount of currency flight out of a large nation, whereas these risk-on assets like gold and like Bitcoin will become very appealing. Okay, whereas some people are viewing this as a bearish indication, I'm not claiming to know what is going to happen. All I know is that it's only a matter of time before Bitcoin becomes a very viable option for a large amount of money to not be destroyed during a crisis. Okay, and let's not forget, gold's market cap right now is $22 trillion. And not everyone has easy access to gold, and it's not very easily transportable. Whereas something like Bitcoin is only $1.8 trillion right now. Whereas even giving Bitcoin a 10x, putting the price near $1 million, would still only be right around the current market cap of gold. All right, so when there's fear and uncertainty, these are sometimes quite potentially the best, most exciting periods to be able to get into cryptocurrency cycles. All right, and looking at the chart of Bitcoin to figure out where we could potentially be going based off of an analysis perspective, from my years of investing, I can tell you that trends tend to move in 5-wave patterns, starting with 1, 2, 3, 4, and up to 5. And we can actually use different criteria to be able to judge where we are in a current trend, not only by just counting our wave structures, but also by using something called trend-based Fibonacci extensions. So what we do to use this tool is we find the first move up in a market. Then we click on this tool, we click at the first part of that up to the high, we draw back down. Okay, and this is a naturally occurring phenomenon, but typically we'll see the end of trends either at this 161.8 value or at this 261.8 value. So if we get a full 5-wave structure and then the 5th wave is coming up to one of these levels, this can give us an area where we can indicate a potential top. Okay, and I know this works because I use this on a daily basis to be able to count waves and be able to get into trades on a daily basis. Okay, so I can count waves, pick key areas to get into, and you can see I'm up $2,000 here, up almost $4,000 now just in a single day. Okay, and I can let these run even just for a few hours using this analysis to make $3,000-$4,000 sometimes on individual trades. You can also use this just for our general investing. So going back to the first time that Bitcoin took a run, if we have where the momentum started to come into up to our wave 1, we take that same indicator, click from our bottom, click up to our top value, back down. You can see we had our 5-wave pattern up into one of these key levels, and this is exactly where Bitcoin started to sell off. Okay, so looking at the current trend in Bitcoin, if we consider our first wave down to here, our third wave has hit this 1.618 level. We have a move down to 4. The next area for us to go up into our fifth wave, up into 262.8, would bring us up to $166,000 for Bitcoin. And just as some sort of extra confluence that I tend to follow, this red line is showing us something called terminal value, which you'll notice every time we've had a cycle high, the price of Bitcoin has at least made contact with the terminal value before making an all-time high. Okay, so right now, even if Bitcoin were to barely make contact with the terminal value, that would already be well up into the 160s, which is quite nearly already 100% return from where we are right now. And I think it's really important to understand that if we look at Bitcoin sort of from a zoomed out perspective, our cycle highs tend to happen well into this red range, in which case we have barely passed into. And if Bitcoin is to pass into again up into terminal value, this should bring us well up into the 100 to 200 range for Bitcoin, which in and of itself is a massive opportunity. But I think it's important to understand with a little bit of perspective like this, knowing that these are the high periods of Bitcoin and that down here are the low periods of Bitcoin. This one map of Bitcoin and understanding of global liquidity and trends can allow you to position yourself to not only invest into Bitcoin, but also be able to position yourself into smaller projects where we could realistically see trillions of dollars flow into other cryptocurrencies other than Bitcoin if something like this is to happen, to be able to accelerate that growth and realistically take small amounts of money to be able to scale this up into $1 million over time. Understanding where we could be going with cryptocurrency is great, but where the money is really made is understanding the actual application and approach to be able to enter the market, what to do, what not to do. I'm going to share with you my approach in ideology, then I'm going to show you how to structure this out in the projects that we can use inside. All right, so let's get into how we're going to grow capital in portfolio structure. Now, I want you to understand what my objective is now, knowing what I know now versus what it was before. And I can tell you all of the investors who are successful investors pretty much agree with this core principle, and people who are not always have an adverse reaction. So I think this is really important for people who are trying to amass wealth to at least be open to digesting. Okay, so when you're investing, it can be tempting to want to hit something big or flip the money and view your investing as I put something in, I wait a period, I take it out, and then that's my return. But realistically, the reason 99% of people can't do this is because once you're starting to play this game, you're looking so short-sighted that you have to be really good at trying to time the exact perfect points in the market. And as soon as something starts going against you, you're going to use emotion. And most people don't have a game plan or a way to actually be able to strategically approach this. Okay, even the best investors in the world have a hard time outpacing the average growth of the market and timing specific instances. But there's a way that we can actually sidestep that if we understand truly how things work. Okay, and this is one thing that I really want you to consider and understand. When you're starting off, your main focus is growth. Later, once you've scaled that up, then the objective can be cash flow, making an income or making money off of your investment. Compound first, cash flow later. Thank me later. So the goal really is to be able to get into the market and be able to add, sometimes at key points, otherwise pretty evenly, to be able to take advantage of something called compound annual growth rate. And I'm going to explain some of the traditional ways to do it. And then I'm going to explain why I've done it in crypto and how I've sort of navigated that. Because if you're looking to scale capital quickly, there's a massive opportunity if you structure this right, in my opinion. So this is really cool, but I want to explain this first. Over the last 5 years, the compound annual growth rate of stocks about 14.3%. Last 10 years, 12%. Last 20, 10. So over time, you're going to get between 8 and 10% compounding annual growth rate for traditional stock investments. All right. And this is also pretty similar to real estate. Compound annual growth rate for commercial real estate was about 9.5%, 10% well diversified, and about 11.5% in REITs. It's basically like stock investing in real estate. All right. Now let's look at the compound annual growth rate of Bitcoin. These are the prices in April. I'm shooting this video in April right now. 2012, $5. 2013, $93. 2014, $500. Right? And so on and so forth. There's a few things to understand here. There's only been a few years where the price has actually been lower than the year in front of it. Okay, last year we had 37% annual growth rate. Over the last 5 years, it's 57. And over the last 10 years, the average annual growth rate has been 78% for Bitcoin. This is much bigger. Most people view this as it's an up and down market. 78% is not that crazy. I'm looking for 5x, 10x gains. I understand that, but this is a massive, massive opportunity. And I'm going to explain why in just a second. The second thing that I want you to pay attention to is this. Notice how we have start point, higher, higher, lower. Start point, higher, higher, lower. Start point, higher, about the same, lower. Start point, higher. In 2015 or 2016, if this cycle is to repeat, usually the second higher number is substantially higher, once again following that Bitcoin cycle. Now, that doesn't mean that it has to happen, but the chances of seeing a massive capital inflow with all of these tendencies, while most people are not paying attention and they're all scrambled by the news, is something that is interesting and a good opportunity for most investors. And even if it's not, over the past 10 years or even the past year, you're getting massive annualized return. Okay, so not only is this amazing, but if we look at the total cryptocurrency market, excluding Bitcoin, if we are to see a cycle like this play out or anything remotely close to this, we could be seeing $2.2 trillion of capital moving into companies and projects other than Bitcoin, which can give us 300, 500, 1,000% return. Or they can wind up going to zero, but this is why you have to follow a proper portfolio structure to account for that risk. And this is what most people don't do in crypto. And that's the framework I'm about to show you here. But these smaller projects can hyper accelerate our process. And this is why this opportunity is so exciting, right? If you're looking for get rich quick schemes, or you're looking for, a magic way to make capital, if you're looking for that type of video, that's not the video you're going to be watching. This is exactly how all of the smartest people in crypto and the smartest investors I've talked about are going to approach the market. Okay, so I first want to show you an example of just following this one simple process, maintaining a level of consistency, how we could actually amass wealth in cryptocurrency. Okay, then I'm going to show you how we can add into that and jumpstart this to get there even quicker. Okay, so this is actually a portfolio forecasting tool that I built by myself with AI. Okay, so I can click this button and create a strategy. Okay, so we'll call this simple 1,000 growth. Okay, so say we're starting this year, say we start with $1,000. All right, and as Bitcoin gets larger, that annual growth rate is going to diminish over time. But let's say conservatively we get 35% for 10 years. Say we get 20% for another 10 years. Say we eventually get down to the annual average of the stock market after 30 years, once Bitcoin has matured in size. If we create this strategy, even just adding $50 to this into Bitcoin each year over the long haul, in this simple growth method would give you over $1.5 million in crypto by taking advantage of this compounding. Okay, obviously if we were to do this into real estate or something like stocks, right, and say we were to get just our 10%, you can see this starts to look very, very different. And while I am diversified into both, if we're talking about growing a small amount of capital, this is why it does pay dividends to be risk on in a crypto environment. And this is the opportunity that I saw when I started investing a long time ago. And this is sort of the lens that I've looked through that I want to share with you guys. Okay, but it gets even better than this because we can now stack higher return cryptocurrencies to be able to inject into this period. Also, what I do, considering I'm a day trader, and like I shared with you before, I'm sometimes making, $3,000 to $5,000 in a single day trading. What me and the team do that have learned these same exact strategies, we're sometimes pulling, really nice gains out of the market, $2,000, $1,000, $2,100. Okay, not only can we get into smaller projects to sort of accelerate this, say we're sticking to a baseline, diversifying into stocks, but also say we add even $300 into this process. Even just doing this, if we maintain significant growth in this market, right, that's $6.8 million at $300 per month. Even if we really underplay the compound annual growth rate, say down to 15%, which is just over the stock market, that's $4.5 million. Or say you're able to scale this even higher, where sometimes I'll be investing, say for example, $5,000, $10,000 a month into cryptocurrency, even starting with a really small amount of money, but working towards being able to continue to compound into it can really create massive portfolio size. Okay, say for example, we go into our high risk, which we're going to talk about portfolio structure on in just a second, and we're able to invest, say $200, and say we are able to play into these crypto cycles. Say we're able to, over the whole period of a 4-year cycle, make a 5x from this, so 1,000. So we're adding approximately $100 a month into this total process. You can see just for a slightly more intentional, but even still conservative amount of money to put into these higher risk cryptocurrencies, if we're able to even make $100 extra per month to be able to put into this, if we combine both of those portfolios, that's $4.6 million, starting with $1,000, adding $200 on a main portfolio, and then taking some calculated risks on some smaller ones. And this is the framework that I've applied with larger numbers to be able to be at this rate into the 7-figure portfolio size. And technically at the age of 93 is when I'm statistically going to be a billionaire. We'll see if that actually happens, but I thought that was kind of a cool metric. All right, so now that you sort of understand my take on the compound growth effect and the potential there, let's get into actually structuring your own portfolio so you can apply it in your own framework. I can share this with you so you can play around with it too. Just follow me on Instagram, DM me the word tools, and you'll have access to this as well. Okay, so this is the whole portfolio strategy condensed down into one view. This is sort of a part 3 video, so if you haven't watched the other videos, these are really good as well. It's going to be linked in the sheet that I share with you. Okay, I'll also put it at a card at the end of this video. So to summarize the strategy, we're going to be setting up a process to guarantee millionaire status, even starting with nearly nothing, which most people don't understand. Okay, so we've sort of gone over maximizing upside, understanding cycle mapping, evaluating assets, and then understanding diminishing compound annual growth rate. Okay, don't worry if this seems too complicated. Just take 5 or 10 minutes, read through these terms, and everything will make a lot more sense to you. It could literally change the entire trajectory of your life. So lock in. Step 2 is where you need to make a decision on the model that you're going to follow that fits, how much you're starting with and what your sort of objectives are. So you need to decide your risk tolerance. And what we're going to be using is 2 major components. One is going to be your core portfolio, which is going to be that Bitcoin portfolio we were talking about. And then the other is going to be the casino portfolio or the high risk portfolio. Okay, and depending on how quickly you want to grow capital or not will depend on how much you reserve for each area. So next we need to focus on reserve allocation. And this plays into the strategy of keeping some money on the side to be able to allocate into the market during times where we have black swan events, market goes down 70%, and you can sort of lump sum your contribution in there, which is actually what I just did in the stock market. I was sitting in cash. I put a lot into the market and now it's already up a tremendous amount. This can sort of boost up your progression along the way. But if we take the total amount that you're going to be reserving into this process per month, 10% is going to be just kept on the side for that purpose. Okay, the remaining balance after the reserve allocations, say we're investing with $1,000 to start, so we'd have $900. 90% is now going to be considered our total amount. Okay, so this step is where we have to pick how aggressive you want to go with your investing. See, with crypto, it's already sort of risk on, so I like to steer in the less risk, more conservative approach, which would basically reserve 25% of that remaining balance of your monthly contributions reserved into that high risk casino portfolio, while leaving 75% being allocated into that core portfolio. Okay, so once again, if we were doing something like $1,000 per month, or that's just the example for here, you'd have 225 as your high risk and then $675 going into your core relatively safe portfolio. So you basically have to pick one of these 3 models. So the next stage of this is understanding how to distribute and build these individual portfolios. Okay, so here's how these portfolios are going to work. Our core portfolio is going to be made up of potentially 25% medium risk cryptocurrencies and then 75% low risk, which is basically Bitcoin, right? This depends on how aggressive you want to go. If you're sticking with a conservative model, basically sticking to Bitcoin in this core portfolio is going to be the simplest, easiest way. But if you want to start to add some larger cryptocurrencies like Solana, Ethereum, XRP into that mix, while I view these still as extremely high risk and not something that I want to bank on long term, it is okay to get some exposure to that, in my opinion, into that sort of core portfolio. But in general, our core portfolio up here is going to be primarily Bitcoin. Now, if we look down here, we have several different options. So this is our aggressive higher risk allocation where we're taking 25% of the capital into the low risk. Okay, so you can come in here and refer to this and sort of build out your own scenario. I'm going to be basing my explanation off of our low risk conservative approach. And you'll see that would put us at 75% allocation into our core portfolio with 25% into our risk on portfolio. Of that 25% that we're reserving now, we can separate this into 3 different sections, which are going to be low risk, mid and reach, and highly speculative cryptocurrencies. This is going to be largely based off of something called market cap, which is basically the total dollar value of a crypto project. You can see Bitcoin's market cap is about $1.8 trillion. More people invested in it means that more people believe in it, and it's slightly more secure than something, say for example, like Theta, where the market cap is only 600 million. But on the other side of that, in order for Bitcoin to double, we now need basically $1.8 trillion of market cap to be added, where in order for Theta to double, we only need $600 million. All right, so smaller the project, higher risk, but also higher reward. Bigger project, smaller the risk, but smaller the potential reward, because it would take more collective decision making in order to push the market up. Okay, I do discuss this a little bit in more depth in the other videos on the series, which once again I'll put in cards at the end of this video. Okay, so considering our portfolio in terms of risk factors, if we're investing 75% in a conservative model into our core portfolio, that's going to be 7.5 risk factors, and then we're going to have 2.5 risk factors divided by however many smaller projects in here. That means that you're taking smaller dollar amount risks on these smaller projects that can say 5 or 10x, but you're not risking all of your capital into projects that most likely will end up not materializing. Okay, because cryptocurrencies are going to go on big runs and then go to nothing. Big runs go to nothing. Most of these projects, sadly, are not going to last long term, so we don't want to continue to add into these. We want to get into these high risk positions when the market is at a low, and then when we hit market highs, we're holding on to our core portfolio, and then these high risk plays we're closing out on until once again we go back to this period in Bitcoin, and then we can start scooping up these plays again and rinse and repeat this process to once again supercharge our core portfolio. Okay, so step 4 score is basically going to be mapping out your monthly contributions, and then your casino portfolio is going to stop getting added to when we're nearing the top of the cycle with those metrics that I shared with you earlier in the video. And once again, I explained this exit strategy really thoroughly in the other two videos, so I definitely recommend watching those videos in addition to this. Okay, so now I'm going to talk about some high growth cryptocurrencies that we can put into this process. Now, this is not financial advice. Keep in mind, cryptocurrency is the wild west, so a lot of these projects aren't going to come to fruition, which is why I always diversify my risk. But on the other side of that coin, there can be a ton of upside potential, so this is critical for the investing process. So one of the biggest ideas that is really going to move markets and add a tremendous investment opportunity is something called real world assets. Now, I talked more about this in the other videos once again, but real world assets is basically putting tangible things on the blockchain, and this is anticipated from people like Larry Fink, the CEO of BlackRock, to be the next generation of markets that is expected to have a $30 trillion market share, which would be one of the largest expansions that we've ever seen in the investing front. So finding smaller cryptocurrencies that align with this can be a massive opportunity on the investing side. Okay, so one project that I am looking to get into if markets are able to come down slightly, okay, I'm not going to get in at prices where they're too high, something called Ondo Finance, only $2.9 billion in market cap. And what Ondo's trying to do is basically be the institutional level solution for putting real world assets on the blockchains. So they're a layer one blockchain, basically the foundational layer of building. Okay, they have large partnerships and they have amassed a pretty significant market cap, $2.9 billion, right? Even if they were to get a, say, 1% share of the total real world asset, okay, we're still talking about the possibility of them being $10-20 billion in market cap, which could effectively give us a really nice 5, 10, 15x in price if something like this does work out, especially if we can get it a little bit lower. Once again, this is something that I've shared in the past several videos. Price was actually higher when I was talking about it. We actually did come down into our dip buy area here on Ondo, right where I was sort of calling out for you guys. So once again, if this does grab up some of that real world market share, this could be a really nice 5, 10, 15x for that risk on portfolio. Okay, another real world asset project that I was looking at was something called OM. Now, this is something that we were talking about on YouTube and also on the private side of our team in mentoring. Okay, I was talking about not entering this project when we were up in these prices, even though we were sort of ripping highs, right? I was waiting for a gradual pullback, and I said if we weren't going to get a gradual pullback, we were not going to enter into this market. Okay, we actually set up a short position here where I was able to enter at this point, and unfortunately I took profits a little early on this, but I wanted to hopefully short this down and then potentially look for an entry long, but this ended up just having a complete meltdown. Hence the reason why we're diversifying risk, but also we're learning how to trade the market so that we can take advantage of opportunities, whether it's up or down. So if we were sort of going into this without these considerations, we would be down almost 100% of our position, but instead we waited for a proper entry, which prevented us from even getting in on an entry in the first place, and we're actually able to make money on the downside, which is really what I'm trying to emphasize to you guys. Learning the markets, learning to be able to diversify risk, and learning how to sort of read these markets is the only way to not be able to be wiped out. And I can tell you I've made every mistake in the book with things like this, so being aware of these things is a good way to prevent that. Okay, the next high potential project that I'm interested in, and this is something that I'm very particularly interested in, this is super niche, is a company called Subsquid. Now, this is a company I've been talking about for about 6 months. You can check on the channel, you can check in the Discord, but this is a very interesting data indexing project that is going to be integral to AI agents. AI agents are going to play into real world assets. Okay, what Subsquid is doing is very similar to what projects like Snowflake are doing on the traditional side, where you can see the market cap is $50 billion. Even if Subsquid is able to pick up some of that market share on the cryptocurrency side, we could be talking about $500 million to $1 billion in market cap. All right, we're already starting to see some momentum on this project. Okay, this is where I started talking about it with you guys on YouTube, and you can see I have my risk factor set up here, assuming this could go to 0, and we're already up 4.2 risk factors. Okay, if we do see a proper bull run, I think we could potentially see a massive move in Subsquid. Even if we were to get another 5 to 10x from here, that would bring us right around $1 billion valuation. Okay, whereas if we look at similar crypto projects, a company like Graph, starting at 150 million, was able to get to a 5 billion valuation, and most people haven't even heard of this project yet. Okay, and if we are to get something like this could be somewhere between a 25 and 50x for those of you guys that were paying attention on YouTube, and for those of you that are on the private team as well. Okay, so even if some of these cryptocurrencies are going to completely fail, we really only need one of these to work out substantially in order to really be able to jumpstart those gains. Okay, so Subsquid is a really interesting project. Another project that I have my eye on in the cloud compute space, which has become a massive industry, it started to cool down a little bit in crypto, but I still think potentially has a lot of upside, is a project called Grass. Okay, they're in the business of data scraping, where you can basically add this as an extension on your computer, and you can actually earn earn money from renting out the internet that you don't use. Once again, we were looking at this after launch up here, but decided to wait for an entry down at this key area. And this is exactly where price hit. We're starting to turn around now. So if we get momentum in the market, even going back to all-time highs, it's going to give us, off of our zero risk, about 3.5 risk factors. Okay, Grass right now is only about 400 million in market cap. This could potentially get to that $3 to $5 billion valuation as well, which could once again give us that 5, 10, 15x opportunity to the upside if we do see continuation of this cycle. Okay, the next project that I'm still pretty excited about is Tau. I've talked about this for quite a while. This is a pretty large machine learning cryptocurrency, effectively like a Web3 version of ChatGPT. Okay, this is something that we called out on YouTube at about $70. Okay, we had a pretty significant push up. We're up about 3 risk factors right now, but this tends to move pretty drastically with the market. So I think the potential upside from here is still pretty significant for Tau if it does work out. Okay, so as far as the projects that I'm sort of interested in, we have our large caps here for these types of returns. As far as the mid to reach projects, I'm looking at Ondo, Tau, Near, Aerodrome, if Base Protocol wants to start to take off. And then for these sort of low cap, higher risk trades, I really have my eyes primarily on Subsquid, Grass, and Ironet. My focus is primarily geared around Bitcoin. Okay, but once again, diversifying across these smaller ones, focusing on the core of what you're doing and focusing on the compound in conjunction with paying attention to the crypto cycles is really how you're going to be able to preserve and scale your capital into millions of dollars in cryptocurrency. If this is valuable to you, make sure you share this to a friend. Okay, if you want to stay up to date, make sure you're in the Discord. If you want access to any of these tools, follow me on Instagram and DM me the word tools. I'll send them over to you. If you're interested in our trading team, there's links here as well. Until next time, I will see you all in the next video.